Hi, and welcome to our end of August update from the Wealthy Doctor Institute. Physicians leading physicians through finance. We work with physicians and other busy professionals who are not happy with their current investment strategy. We help them get this part of their lives handled so they feel empowered and in control. I'm David Ye, and in my book, The Busy Doctor's Investment Guide, I show you just a few ways with just a few adjustments each year can help build and protect wealth. Although the strategies in this book are easy to calculate each month, for those of you who are new to the concepts in the book, or for those of you who are new to investing in general, this video will try to clarify what I do every month. Feel free to follow along every month until you get the hang of it. So this month, first we'll review our system, starting with the 20-month moving average system, as well as the upgraded SectorSurfer version called StormGuard Armor. Then we'll review the SectorSurfer version of MRI, since I'm no longer covering the MRI as originally described in my book. Then we'll remind ourselves of the rules for the 25% stop loss system for individual stocks. And then we'll monitor the free SectorSurfer strategy. So here we are reviewing our systems. The first system is the 20-month simple moving average system, abbreviating to 20-month SMA. So the rules are simple. If the price of the S&P 500 Index Mutual Fund is above the 20-month moving average, it's relatively safe to stay invested in the index fund, otherwise get out. The 20-month moving average is our safety belt. It only works if you watch it every month. So just like how a safety belt doesn't work in a car unless you actually use it, the 20-month moving average system won't be able to tell us when it's relatively safe or dangerous to be in the markets unless we actually calculate this every month. So here's a graphical representation of the 20-month moving average. So here we have the blue line, which is the S&P 500 Index Mutual Fund, dividend reinvested, and the red line, which is the 20-month moving average. And you can see by the end of this month, the ending price for the Vanguard version of the S&P 500 Index Mutual Fund is $268.75 per share, and the moving average is now 236.05. So just as an exercise divide, we have a 13.8% cushion. So that means the stock market went up, the moving average also went up, but the stock market went up so much that now it can drop 13.8%, almost 14% by the end of next month, and will still be in relative safe territory. But unless it drops more than 13.8% by the end of next month, we stay in the stock market for now. So here's SectorSurfer's StormGuard Armor version. So rotating between the same stock and bond mutual funds, you can see that for this month, we're still in stocks. And here's the StormGuard Armor indicator. It's still in positive territory. In fact, just like how with the 20-month moving average, the cushion is increasing. Well, the cushion is increasing for the StormGuard Armor. It's getting more and more positive for now. So just some observations for this month. The S&P 500 Index gained this month. The 20-month moving average signal continues to signal relative safety, in the stock market at least, and SectorSurfer's StormGuard Armor also remains in the safety zone. So remember, these systems are not designed to catch peaks. Markets must fall enough for our systems to fulfill criteria for danger zone before we can get out. Investing in the stock market does have its risks. All we're trying to do is mitigate the risk as much as we can mechanically, without tripping over our own emotions. So the next system is the MRI system, or the monthly rotation investment system. Now, the version I describe in my book, I no longer cover. Instead, since the SectorSurfer version of MRI does so much better than the version I describe in my book, I'll still cover the SectorSurfer version, which is using the same three mutual funds that I describe in my book, namely the S&P 500 Index Mutual Fund, the Emerging Markets Mutual Fund, and the Inverse S&P 500 Index Mutual Fund. All we're doing is trying to figure out which of these three funds has the best momentum at any one month, and then just invest in the one fund that has the best momentum. Now remember, if you're using the SectorSurfer version of MRI with these three funds, do not use the StormGuard filter with this, since we already have an inverse mutual fund to help mitigate bear markets. So here's SectorSurfer rotation of MRI funds. you see the three funds, and the white line is where we are. We are still in the S&P 500 Index Mutual Fund. And you can see this month, this fund has been outperforming the other two funds this month. So far this system is doing like how we like it to. So observations of the month for the SectorSurfer version of the MRI system. Number one, the S&P 500 Index momentum continues to be greater than the emerging markets. So that's where we are right now. As a result, when the emerging markets started to go down, and we caught the signal in beginning of July, and we've avoided some of the losses due to the emerging markets since then. Now notice, when we're talking about international stocks like emerging markets, most pundits will have us believe that we need to listen to the news. Have we mentioned anything about news here? Have we mentioned anything about politics, about Trump, about geopolitical developments? No, this is all just pure algorithmic analysis. When you read the news, listen to the news sells itself by generating strong emotions, usually fear. However, strong emotions are exactly what drives the herd that drives the markets. We do not want to be part of that herd. We want to be more objective. That's why we stick with algorithms. So our next system is the 20% trailing stop loss system. This is only when you absolutely positively need to invest in a particular stock for some reason. I prefer investing using ETFs rather than individual stocks, because individual stocks do have idiosyncratic stock-specific news risk that can tank a particular stock even when the rest of the sector is still doing well. But if you need to buy a particular stock to begin with, at least consider this system. Here's how it goes. With a 1% risk trailing stop system, remember, we don't want to risk any more than 1% of our portfolio or trading account on any one stock. Once we buy the stock, you put a trailing stop on that stock. So we can use up to 4% of our trading account to buy that one stock, and then immediately put a 25% trailing stop loss order. This way, if that 4% loses 25%, you've only lost 1% of your portfolio. Capiche? Therefore, if the stock goes up 33%, the stop loss order has now broken even with your initial buy price, and you can go ahead and use another block of 4% of your account to buy another block of stock. And then, of course, since now you have more shares in your account, you update your trailing stop loss order to reflect the increased number of shares. And you keep doing this until you're finally stopped out. So the next system is your own SectorSurfer system. I can't tell you what to do with your SectorSurfer system. I can just tell you that several of my own SectorSurfer systems did generate a trading signal this month. So look at your SectorSurfer system. That means log on and see if you're missing any trade signals if you haven't already gotten a text or an email. Now, SectorSurfer improves on classical pie chart investing if we structure correctly. So you can think of SectorSurfer as having two main tools. First, it has a filter to tell whether or not it's relatively safe or dangerous to be in stock markets. Then it uses sector rotation, and if you set up properly, you can rotate through just stock mutual funds or ETFs when it's relatively safe to be in the stock market, and rotate through only bond or other non-stock ETFs when it's dangerous to be in stock market. You can combine the sector rotation and the strong guard armor in this particular system. Just be aware of the nuances we've covered before when constructing and executing your strategies. So again, if you set up your strategy correctly, you will get a signal through text or email. I got some signals this month. Log into your account, see if you missed any signals. We can at least cover the free SectorSurfer strategy that comes with anyone who signs up with SectorSurfer. If you modify it, you will have to pay a nominal monthly fee to have SectorSurfer monitor your strategy. However, at least with a free strategy, I'm not revealing anything that's too proprietary. So here goes. Out of the 6 mutual funds that the free sector strategy comes with, including using a more primitive version of Stormguard Armor, switching into a money market fund when it's dangerous to be in stocks, right now we are still in the Fidelity Small Cap Stock Fund. Now obviously there are many ways we can improve on this strategy, but if you like this curve where it's still relatively safe compared to its constituent parts, and if you like the return compared to the S&P 500 index, and if this is good enough for you, a free strategy may work for you. Maybe. So in summary, we've covered our systems this month with the 20-month moving average system, as well as the SectorSurfer version of the danger filter, namely the Stormguard Armor system. Then we covered monthly rotation investment system, at least a SectorSurfer version. Then we covered our strategies on how to deal with stock tips, and we also reviewed our free SectorSurfer strategy. Keep those questions coming. I know I talked to several of you personally each month, and realize that for some of you, these video updates are not enough, especially if you're still unhappy with your current investment strategy or lack of strategy. I'm going to offer a complimentary investment wellness checkup and breakthrough session for you. Just you and me. Ask all the questions you want, no matter how seemingly basic or close you think you are. In our checkup and breakthrough session, we'll together create a sense of clarity about the financial future you really want, the reasons you're investing to begin with, and how do you get there, discuss investing building blocks that are more specific to your situation, and determine what has stopped you in the past from you getting what you want now. Identify what are the most important steps you need to take now in order to get your investing financial goals, and then finally complete our consultation with the excitement of knowing exactly what you need to do next to create the road to a future you really want. Think CME, only the topic is financial and tailored to you. Think wellness checkup, because whether or not you feel financially well, if you had a financial cancer or blind spot you didn't know about, wouldn't you rather at least know so you can deal with it before the problem grows and metastasizes? Don't be bashful reaching out. The more you delay, the more time is against you. So, until next month, invest safely.